Hello, today we're going to discuss credit rating. Now, what is credit rating? Credit rating means an assessment made of an entity's ability and willingness to meet the financial obligations of interest and principal repayment of the concerned debt instrument on time. It is a process of evaluating risk associated with a credit instrument. Rating is an isolated function of a credit risk evaluation. Rating is useful in differentiating credit quality. It is an expression of opinion by a rating agency. Rating will facilitate comparison of relative value between competing securities. It also helps in recognizing the risk involved in the investment. Now we move on to the features. Number 1, credit rating is used to estimate the worthiness of the credit for the company's debt instruments. Second, credit rating has been done after considering various factors such as financial, non-financial parameters and past credit history. Third, credit rating is simple to understand and it facilitates universal applicability. Credit rating also makes it widely accepted as the symbols which are used are generalized. Fourth, the process of credit rating is very detailed and it involves lots of information such as financial information, client's office and works information, and other management information. It involves in-depth study. Fifth, in India, ratings are undertaken only at the request of the issuers and only those ratings which are accepted by the issuer are published. Next, the quality of services offered, consistency and integrity would determine a rating agency's success. 7. The rating is done for a particular issue and not for a company or the issuer. Thus, it is quite possible that the two instruments issued by the same company carry different rating. Credit rating is much broader in concept than financial analysis. The rating is normally done at the request of and with the active cooperation of the issuer. Now we will discuss the advantages of rating. First, we will discuss to investors. Number 1, helps in investment decision. Credit rating will guide the investors in selection of debt instruments. Thus, it helps in decision making pertaining to investment. Usually, higher the rating, the more will be the willingness to invest in these instruments, considering the safety and vice versa. Second, quality information at low cost. The investors will get the good quality information at low cost. Third, benefits of rating reviews. The rating review helps investors in investing their money according to risk. If company is highly rated, it means low risk and vice versa. Thus, the investors can take the calculated risk on investment activities. Second, to borrowers or issuers. Lower cost of borrowing. High credit rating will enable the company to offer low interest rates on fixed deposits, debentures, and other debt securities. The investor will accept low interest rates because they prefer low risk instruments. High rating means low risk and vice versa. Second, wider investor base for borrowing. If the company gets high credit rating for its debt issue from rating agency, most of the investors are interested in investing there. A company with high rating for its instruments can get a wider investor base for borrowing. It can approach financial institutions, banks, investing companies. The good rating can attract international investors also. Next, good for unknown companies. Credit rating is beneficial to the relatively unknown companies, such as closely held companies. If the credit rating is good, the public will invest in these companies. Thus, investors rely on rating grade rather than on name recognition. Next, acts as a marketing tool. It acts as a marketing tool which helps in developing confidence of customers. The customers feel confident about the products manufactured by the companies carrying higher rating for their credit instruments. Credit rating not only helps to develop a good image of the company among the investors, but also among the customers, dealers, suppliers. Next, to the brokers and financial intermediaries. Less efforts. Stockbrokers have to make less efforts in persuading their clients to select an investment proposal of making investment in highly rated instruments. Second, saving of time, energy, cost and manpower. Brokers save time, energy, cost, and manpower in convincing clients about investment in any particular rated instrument. Benefits to the government: A. Channelization of idle funds. Fair and good ratings motivate the investors toward investment. Therefore, the idle funds will be channelized for the productive uses. Second, employment opportunities. Mega issues rated by the credit rating agency enhance employment opportunities in the economy. Third, investor protection. It provides investors protection without any burden on part of the government. Fourth, facilitates formation of public policy. It facilitates the formulation of public policy guidelines on institutional investments. Lastly, benefit to credit rating companies. Honest and sincere credit rating agencies would survive in the market. There is a scope for other allied financial services for a credit rating company. Next, we will deal with the regulatory framework. The following regulations regarding functioning and affairs of credit rating agencies in India have been prescribed by SEBI. Number 1, process of getting certificate of registration. Second, obligations of credit rating agency towards SEBI. Third, restrictions on the ratings of the security. Fourth, procedure for inspection and investigation by SEBI. And fifth, action in case of default. Now, we will look at credit rating agencies in India particularly. First, we will discuss about CRISIL Limited. CRISIL is the first credit rating agency in India, promoted in the year 1987, jointly by the ICICI Limited and the Unit Trust of India. It commenced the operation on 1st January 1988. It pioneered the concept of credit rating in the country. It has diversified into related areas of information and advisory services also. It offered its share capital to public in the year 1993. CRISIL forged a strategic business alliance, Standard & Poor's S&P Ratings Group. The tie-up was a part of CRISIL's strategy to develop its skills and processes. S&P acquires a 9.68% stake in CRISIL on May 8, 1997. The alliance with the world's leading rating agency added a new dimension to CRISIL's methodologies. It provides CRISIL with exposure to the international rating market and to S&P's rating processes. CRISIL was set up to rate debt obligations that would guide investors as to the risk of timely payment of interest and principal. Its main objectives are listed as below. Number 1, to assist individual and institutional investors in making investment decisions in fixed interest securities. Second, to enable companies to mobilize funds in large amounts from a wide investor base at a fair cost. Third, to enable intermediaries to place debt instruments with investors by providing them with an effective marketing tool. And last, to provide regulators with a market-driven system for bringing about discipline and a healthy growth of capital markets. Now we will discuss about ICRA Limited. The ICRA Limited has been promoted by the IFCI Limited as the main promoter, holding 26% of the share capital. Apart from the main promoter, the other shareholders are the Unit Trust of India, banks, LIC, GIC, Exim Bank, HDFC Limited, and ILFS Limited. It started operations in the year 1991. The main objectives of ICRA are as follows. Number 1, to assist investors, both individual and institutional, in making well-informed decisions. Second, to assist insurers in raising funds from a wider investor base in large amounts and at a lower cost for highly rated entities. To enable banks, investment bankers, brokers in placing debt with investors by providing them a marketing tool. Next, to provide regulator with market-driven systems to encourage the healthy growth of the capital markets in a disciplined manner without additional burden on the government. Lastly, CARE Limited. The CARE Limited is a credit rating and information services company promoted by the Industrial Development Bank of India, jointly with financial institutions, public-private sector banks, and private finance companies. It started its credit rating operations in October 1993 and offers a wide range of products and services in the field of credit information and equity research. Unlike the CRISIL and ICRA, the CARE is very cautious in entering new areas of business. The Care Limited currently provides the following services. Number 1, rating of all types of debt instruments. Second, advisory services in the area of securitization, transactions, structuring financial instruments, financing of infrastructure projects. And third, information services. Now we will deal with the limitations of rating. Number 1, bias rating and misrepresentation. If the credit rating industry has a linkage with the company or the persons interested in the company, the reports may be biased and partial. Further, companies having lower grade rating do not advertise or use rating while raising funds from the public. In such case, the investor cannot get information about the riskiness of the instrument and therefore is at a loss. Second, static study. Rating is done on the present and the past historic data of the company, and this is only a static data. Prediction of the company's health through rating is momentary and anything can happen after assignment of rating symbols to the company. Third, concealment of material information. Rating company might conceal material information from the investigating team of the credit rating company. In such case, quality of rating suffers and renders the rating unreliable. Fourth, rating is no guarantee for soundness of a company. Rating is done for a particular instrument to assess the credit risk, but it should not be construed as a certificate of quality of that company or its management. The last point, human bias. The investigation team may suffer with human bias due to unavoidable personal weakness of the staff, which might affect the rating. Thank you.